Hello, everyone, and welcome to this episode of 22 Minutes. I am Jason Bates, and I'm going to bring you the lender side of things, and he is Stephen Cotton. He's going to bring us the realtor side of things today, and we together, as I say each and every episode, we hope to not only entertain you, but bring you valuable content that you can use when you're looking to buy, sell, refinance, or invest in property. And if you're looking to do any one of those four things, we want to be your team of choice. So please reach out to us. Our numbers are below and they'll flash up throughout the episode. You can tweet us if you'd like. Head over to our Facebook page. If you're at our Facebook page at 22 Mins, please like the page and share with your friends and family. If you're watching us on the replay, please give us that thumbs up and also share with your friends and family. Email it out to your friends and family. That would be awesome. Awesome.
I like it. Yep. Just because we have 10 minutes doesn't mean we need to spend all 10 minutes.
Right.
I think you're doing stuff with like Periscope or YouTube or something.
Yeah.
So that's all.
Exactly.
Yeah, plus we got a few new groups out there today.
Yes, I'm sharing to a few new groups out there. So if you're new to the show, we do this each and every day, 9 a.m. Arizona time. So mark it on your calendars and join us live if you're able to do that. That would be awesome.
We had a little technical difficulty this morning.
I know. But live has tends to bring out those things. As far as difficulties, technical difficulties. Right. Hey, we talk about or we do the tweet quote of the day. So let's get to that because we've got some very good content for today. If you're looking to buy or sell property, because it does affect both sides. So let's get to today's tweet quote of the day. As soon as I cue it up.
Yeah.
All right, this is what this show at the core is all about. Giving you the knowledge that will pay you interest. And today is one of those episodes. This could be a big deal for you out there, especially in this competitive market. So an investment in knowledge pays the best interest. Very wise words there by Benjamin Franklin. So invest in your knowledge. That's what the show is all about, providing you that content that you, again, can use when you're looking to get into real estate.
I like Ben Franklin was an inventor. I can't believe he was like a womanizer too, right? Like, right?
I think so.
I think it goes. Yeah, I think it goes to show because that picture there just kind of reiterates the fact that you don't have to look good as long as you're smart or wealthy or both, right?
Yeah. Exactly.
Yeah,
exactly. Smart. There you go. Wise words.
Smarter, wealthier, right.
You got to put that in a tweet, man. 140 characters or less.
Right. Benjamin Franklin's proof that you don't have to be pretty.
Right.
Yep.
All right. Let's do our little transition here and get right to today's topic.
I'm ready.
All right, today's topic is some tips that you can use to help get your closing costs covered by the buyer, or excuse me, by the lender. Yeah, the buyer. Or the buyer, the realtor, or the seller. And you've got different options there when it comes to getting your closing costs covered. So we want to define closing costs a little bit here because there are certain aspects of closing costs. So when I speak of closing costs to a client, I speak of the entire amount that you need in order to close on a loan. Some lenders get a little politically correct because there are prepaid items such as interest, escrows, that sort of thing, that are going to be continued as you are a homeowner. You're going to have to pay interest. You're going to have to pay taxes. You're going to have to pay insurance as you own the home. But then there are also closing costs that are kind of a one-time fee. And those are truly your closing costs when you see your itemized breakdown.
Sure.
So when I talk about closing costs, I'm talking about not only your prepaid items, but also the items as a one-time fee in order to complete the transaction. So,
what are your funding fees, for example, like $1,400 or?
Yeah, lenders have fees. So each lender is going to vary on the amount of fees that they charge. Our fees are typically about $1,400
Yeah.
to underwrite and process the loan, right? And then everything else is third-party fees. Everything else
Right.
is going to be title, appraisal, home inspections, HOA, whatever the case may be. Here in Arizona, we don't have attorney fees per se, so I know that graph up there shows the attorney fees, but we don't have that here.
Well, that's why the guy in the middle is confused.
He is confused.
What's up with this?
We're going to clear that up.
What's this attorney fees?
Yeah, what's this attorney fees? Now, the one thing that I want to make clear too, especially for your first-time home buyers out there, the realtor fees are not part of the loan fees. I think that's a big distinction there. Some people think, well, how do I pay you? In fact, I just got asked this a week and a half ago when I closed on a loan. Like, okay, so what do I owe you? I'm like, hey, you don't owe me anything. I guess I wasn't clear, during the process. So there can be some confusion there as to, how things are paid. So the realtor is paid through the sale of the home. The lender is paid through the origination of the loan. Okay.
Yeah, the realtor's paid from the seller's proceeds.
Correct. So the things that we're talking about aren't going to be used or utilized to pay the realtor. Right? Can't do that. But there are some things that a lender can do to help closing costs. So when you're negotiating a deal, and right now we've established this week it's very, very competitive out there in order to purchase a home, right? So when you're doing, you're putting your offer out there, you want to make it as clean as possible. And sometimes asking for closing costs or seller concessions can make it seem a little dirty, if you will, or a little less clean, right? And so one thing that we discussed yesterday a little bit, if you watched the show, was that the lender can pay part of your closing costs on your behalf. And that's what I want to talk about today, because this is a distinct difference between lenders. Some lenders, like Chase or some of the banks and things like that, aren't so in tune in paying your closing costs on your behalf. And then you also may hear these things on the radio. Hey, no closing cost loan. And I want to clear the air as far as the no closing cost loan. So no closing cost loan means that you're getting a higher interest rate. That's what it means. There is no such thing as a free loan. It just doesn't exist.
Some of those commercials talk about like interest rates too. They mention an interest rate with no cost, right? I don't know.
Right.
Commercial.
Yeah. So they'll mention an interest rate, no closing costs, or it's a no-brainer, or what. The reality of the situation is you got to think of interest rates, and this is where it all kind of stems from. And this can be a little confusing. I wish I had a graph. I couldn't find a graph that would really properly illustrate this. But think of interest rates as like a tape measure, if you will. And so between 1 inch and 2 inch, there is 16 divisions of that inch, if you will.
Okay.
Interest rates are very, very similar to that. So between 4% and 5%, there are 8 divisions between those two. And each one of those divisions equates to rebate or lender credit that can be used on your behalf toward closing costs or other items, particularly closing costs, not toward down payment, not toward, anything like that, but toward closing costs. Okay. So if you're at, let's say there's a 0.5% rebate from the lender, given your interest rate, CFPB has made a ruling that, hey, that interest rate that you negotiated with the lender, that rebate is yours. And it is the lender's responsibility to disclose that rebate to you. Now, not all lenders do this, unfortunately.
They don't announce that there's a rebate?
Mm-mm. No,
what do they do?
So what they'll do is, and given the laws of state banking and things like that, it's not required that we state exactly how much we're getting in rebate. Okay. It doesn't, unless you're brokering the deal. If you're brokering the deal, you have to disclose on the early disclosures exactly how much is getting sent back to the buyer. So with that 0.5%, it's really a kind of an ethical thing for the lender to disclose that to the consumer. Tell them. So now that's why I don't hide behind my interest rates. I mean, I'll show the consumer the interest rate. Here you go. I got nothing to hide because I'm not paid from that 0.5%. Some lenders, though, can, and it's not so prevalent today, but there are lenders that are still out there that take that 0.5% and they'll give 1/4% to the consumer while keeping the other 1/4% for the branch or for their organization. Okay.
So by quarter percent, let's talk about what that means. If it's a $200,000 home, we're talking 0.5%. So we're talking about $1,000,
Yep.
right?
Yep.
$200,000 home, 1,000. So you would give that back in the form of credits towards the closing costs or to buy down the loan. But some people would take like maybe half of that 500, give it to the buyer, then the other half take it for their operating costs, maybe, or the processing fees or whatever their office costs, right? I guess is the best way to use it.
Well, let's take it a step further. They'll use it as a point bank system, and they'll keep that money aside, and then the lenders will pay a bonus to the consumer, a quarterly bonus based on how much they have, or they'll use that money that's set aside. So in your example there, $1,000, right? 0.5%.
Yeah.
They'll give $500 to the consumer. They'll keep $500. That $500 then goes into a point bank system. And as that accumulates, they can use that $500 to buy down the interest rate for future consumers to be more competitive on their interest rate. Okay, that's highly illegal, according to the CFPB. Okay,
well, using someone else's income to make
exactly
a deal.
Correct.
Yeah.
Exactly correct. Or they'll take that money, and if they don't need to use it, they'll take it and then pay themselves a bonus, a quarterly bonus, depending upon how much they have accumulated in that point bank system.
Look how much we screwed our clients over. Look at my new car.
I know, right? It's not good. And unfortunately, there are lenders out there who are doing it to this day. I know this for a fact. So that's why I said the dirty little secret when I did my podcast about lenders. If you listen to that episode on iTunes or whatever, ask for the lock confirmation. If you want to know exactly what your rate lock is paying or the rebate of that rate lock, ask for the confirmation, lock confirmation. You have the right and entitled to that lock confirmation. You can then see the amount of that tape measure, if you will, in rebate that you would be getting or the cost of that rate that you would be getting. You can then take that number, compare it against what you're actually getting credited on your loan estimate. Okay? When you get that from the lock confirmation. Because when you lock in an interest rate, we are required to send you additional disclosures confirming that your interest rate is locked. You can take that and look at and compare to see that the loan officer is being honest and truthful with you. Okay? Now, one thing I want to, and that's a helpful hint for a lot of people out there, because I don't think a lot of people know to ask for the lock confirmation.
I didn't know to ask for that, but yeah.
Yeah, ask for the lock confirmation. Always ask for the lock confirmation if you are in doubt. I always, as I've said, I don't hide behind my interest rate. I'll show the consumer, here's the interest rates. Here they are. Here's how you read them. Here's what they look like. I've got nothing to hide because I don't get paid that way. That's not how I get paid. I could care less. That money's yours. That's what you negotiated when you locked in the interest rate. Therefore, it's your money. Now, important to note here, and I know I'm talking a lot here, but there's a lot of information I want to cram into this 22 minutes. Important to note here, if the seller concessions equal the amount needed to cover all closing costs and you have some rebate, as you typically will, you almost always have some kind of rebate on an interest rate, then that additional rebate from the lender should be used to do a principal reduction of your loan.
Okay.
So that therefore all the money is then used. So you either get a lower interest rate because the surplus of the money from the seller credit, or you get a principal reduction. That's how the waterfall goes.
Even $1,000 principal reduction, if the payments are going to stay the same, that's huge because you buy off that loan a lot quicker than 30 years, right? Or does it change the payment?
It doesn't change the payment. It just does a principal reduction. So if you're $100,000 and you got a principal reduction of $1,000, you're at $99,000 when you sign the paperwork.
Yeah, okay? I think that's good. Yeah.
Or you get a lower interest rate. If there's enough money in excess there, instead of getting a 4% interest rate as an example, you might get 3.875.
Yeah.
Okay, so very important. Ask for that lock confirmation. If that's the one thing you take away from this, ask for that lock confirmation.
Well, I put a comment, but you're not showing the comments yet, I guess.
Well, you didn't remind me.
Well, you're on a roll. I didn't want to interrupt you. Wait for you to take a breath or something.
All right, yeah, right. I know, right? Find posts here. Hang on.
It's the only post on there. I mean, I looked. There's another comments, but anyways, so I kind of triggered what you just said, but I put it on there.
There you go.
So when people watch it, they can see what the heck we're talking about. So that's
Yes.
one way, right? The cost of through the lender, which is very key.
Mhm.
And you're differentiating yourself different because maybe 50%, maybe 90% of the lenders do something what you're doing, but there's a handful or even more larger portion that isn't doing what you're doing. Correct?
I would say 90% aren't doing what I do.
Or not doing? Okay.
Yeah, not doing it.
Yeah.
Nobody. There's not, and I know a lot of lenders, and a lot of people from doing this 25 years here in the Valley. Nobody's giving lock confirmations. Nobody. And I'll be honest, I don't give lock confirmations unless it's asked for. I mean, it's really just kind of
Right.
habit, I guess. But I have no problem, and I do it quite often. Here's my rates. Here they are. Here's where you're at. And as a result, this is the rebate that you have. Therefore, that equates to X amount of dollars, and you will see that on this line when I send it to you, and they see it. So there's really no need for the lock confirmation. But in doubt, ask for that lock confirmation.
Well,
For
you want
sure.
to, and you want to disclose it too, that this is for you now, or we can have options here. It's just the whole educating process that you do when you meet with the client.
Yeah.
Show them everything that needs to happen.
And if a lender is hesitant about giving that to you, red flag, big red flag, right?
Yeah.
I would be hesitant to do business with somebody who's unwilling to give me information that is technically mine. I negotiated that rate. I agreed to that rate. Therefore, it is mine. So give me show me in paper, on writing. But we're not legally obligated to give a lock confirmation. So I want to make that clear too. There's no legal obligation from a loan officer to provide a lock confirmation. It's done in good faith, in good business, and good ethics, really.
Okay.
Okay. So that's one way to handle it. You can make your offer a little bit cleaner by asking the lender or having the lender pay your closing costs on your behalf. Now, to elaborate on that a little bit there, Stephanie, I know we're running out of time because I want to touch base on yours. 1/4% equals about 1% of your loan amount that can be used toward closing costs.
1/4 of 1% equals 1% of the loan amount that can be used towards your costs. So if I have a 4% interest, and I got 1/4, which make it 4.25%, you would be able to do 1% of my purchase price of 200,000. You'd be able to do $2,000 towards my closing costs.
1% of the loan amount, not the purchase
Oh,
price. That's the difference.
so so the
So
loan amount on an FHA for 100,000. Let's just make it simple. 100,000 is 96,500. Right, 3.5% off of that.
it's actually a little bit higher than that. It's 97,250 or something like that
Just,
because of the funding fee. So you would get then $970 or whatever it is.
okay,
Yeah, toward your closing costs, not $1,000.
makes
Okay.
sense to me.
All right. Good. Good.
I'm,
I know.
I'm the guy in the blue. I'm the guy in the blue up there. Yeah. And I've been doing this for like 7 years. So no. So if somebody needed closing cost assistance, so we already talked about the rebates and stuff like that that can be used towards it. But if you want to make a clean offer and you wanted 2% or 2 points of your closing costs to be covered, which should cover most of them, you would jump that 4% up to 4.5%. How much on a $200,000 loan? How much is that increase? Do you have a calculator, or do you?
Yeah, I have a calculator here.
adjust
So
that?
$200,000 loan, right?
Yep, yep. So the purchase price is like 212 or whatever. But let's just say it's a $200,000 loan.
Okay, $200,000 loan amount. So $200,000 loan amount at 4% interest on a 30-year term, and I don't want to get into APRs and things like that. So
Taxes.
yeah,
just
disclaimer, full disclaimer here. That's not the interest rates or any of that kind of stuff. You're talking $954 principal and interest at 4.5 as an interest rate. You're talking 1,013. So what is that?
60
50
bucks more.
Yeah,
59 more.
yeah, 50.
The so these down payment assistance programs too is something that's kind of helped explain it what we just did here. If I did down payment assistance like the home in 5 or home in 4 or whatever these 5% rates, right? 5.5%.
Yeah.
Is that what they? Yeah. So that 1% that
Five and a
goes towards
quarter, 5.375, something like that.
sure,
Yeah. Yeah.
in the fives.
Yeah.
So 1% of that 5% that they're giving you goes straight to them for funding
Mm-hmm.
fees, right? They pay themselves 1% of this 200,000, for example.
Mm-hmm.
Um, so they get 2,000 there, and then your interest rates are exponentially higher for your 3.5% down that you're not covering, right?
Yes. 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 In a roundabout way. There are extra fees that are put in place on those down payment assistance loans. So the closing
Yeah.
costs are typically higher as well as the interest rate than what you would get when you do a conventional, put your own money down kind of deal. So,
Because we had a guy that called us. Remember? I think it,
yes.
I think it
Yes.
was that wanted a down payment assistance.
Yeah.
There's a guy that called. He wanted down payment assistance, but he was already in a contract at 4% or something.
Yeah. No, he's already on a contract and he wanted just the down payment. He thought, okay, well,
Yeah,
I want the interest rate that I have right now, the best interest rate that I could get, and plus I want the down payment assistance. And unfortunately, you can't have both. And a lot of times with down payment assistance, there isn't this flexibility within the interest rate that I've described in this episode. You don't have that flexibility to have an adjustment to the interest rate to help cover closing costs. So you're kind of pigeonholed there that you're really relying on the seller to have concessions to make up the closing costs. Remember,
yeah,
closing costs are real. There's no way around it. Closing costs are a fact. If you're getting a loan, you have closing costs. I don't care if it's a
yeah.
refinance. I don't care what it is. You're going to have closing costs. So it's a question of who's going to pay it: seller, lender, whatever. So
Well, and even those VA, the VA no, zero down, zero down, zero closing. When I tell them we have to ask for closing costs to make sure that they have a true 0%, they're like, "What do you mean? This is a VA loan." Well, that 0% down or the no is no. What is the no part? The no insurance. What is the no on the back end of the VA?
that's something that there is. Look, there is no such thing as a no. It was like no origination, no discount,
Yeah.
and I think no closing cost or no origination, no discount points.
Okay.
Okay, but that's changed
Right.
as of from the Dodd-Frank Financial Reform Act. There's not too many lenders out there charging origination or discount points are still out there because if you buy down the interest rate. But
Yeah.
origination fees on VA, what a lot of lenders will do is they'll charge an origination fee because there are certain fees that a lender or a veteran cannot pay for. However, a lender can charge a 1% origination charge to make up for the fees that cannot be charged to the veteran. So they just lump that into an origination fee. Still
Okay.
the same thing. They just kind of do a little bit of a shell game, move it over to the origination fee
Right.
and pay it that way.
And I
So
have another VA question. Maybe next week we do all VA stuff or something. But if a veteran was injured in battle, he's like 35, maybe 40% disabled. Is there something that you guys do on the VA side that or does that just eliminate what we just talked about anyway, the origination fee or?
well, it
Um,
eliminates depending on the amount of disability for the veteran, it eliminates the guarantee fee. Okay,
okay.
some people refer to that as the funding fee. It's not a funding fee. VA is a guaranteed loan against default, where an FHA loan is an insured loan against default, and then a conventional loan is an insured loan, privately insured loan. Okay, so there's some distinct differences there. But a VA has a guarantee fee that is if you one time fee, I think it's 1.7% now or something like that. I can't remember off the top of my head. If you use it a second time, it's 3.3%, and so that's
Okay.
like a funding fee for FHA, where it's added to your loan. So if you're asking for a $200,000 loan, you would then add the 1.75 or the which is the
Sure.
FHA fee, or the 3.3% to that. So you're actually financing, you know,
206.
yeah, 206,000 or whatever it is. So that extra $6,000 would be eliminated if you're a disabled veteran, depending on the
Okay.
percentage of disability. Okay, so that's a VA thing. That's not a lender thing.
Right. No, that's why I say maybe we need to do another VA episode because,
Yeah.
um, I mean, that's what we're seeing today. I get those questions.
Yeah. So that's I know we didn't cover a whole lot from the seller, but we wanted to give you some information that you don't have to necessarily just rely on the seller to pay your closing costs. The lender can make up some of those closing costs depending on the rate. You have to be comfortable with the interest rate, and hopefully it didn't push you over the threshold for getting qualified. If you're already at your price point limit, increasing the
Yeah.
interest rate may not be an option. Okay,
Right.
get it, got it. But if you're not there, then this is a way for you to make your offer a little bit cleaner, therefore standing out in front of the many other offers that may be offered on that particular property. You mentioned, I think you were like on an offer 14th or something like that on an offer,
Yeah.
right?
We
And
were number 14, and then the way we designed it, we were the second best, but we weren't by like 300. So
yeah. So this is a way to do that. And by doing that, you're freeing up the options for the seller because they don't have to just take and increase the sales price or, figure out their net that they need to get to.
right,
So it makes it a little bit easier for everybody.
clean it up. Yep.
Clean it up. Way to clean it up. All right, cool. Well, we're out of time. I know that was a lot, and I know I did a lot of talking. I probably should have focused on me a little bit more, but that's all right.
Focus on you a little bit more.
Well, I just had us side by side for the most
Oh yeah,
part,
yeah.
and just production
Oh
value,
yeah.
production
Oh, you
value.
mean close up? Okay, I got
Yeah,
you.
yeah.
Talking out loud.
Yeah, talking out loud. But hey, hopefully you got some good information that you can use. Talk to your agent about that. Talk to your lender about that. If your lender's not willing to do that, hey, call me, call Stefan. We are more than willing to help you out to make
Yeah.
your offer as clean as possible so that you get the best opportunity to get that American dream and the home that you want and not have to settle for a home that you may not want. So anyway, that's going to do it for today. Hey, join us Monday through Friday, 9 a.m. Arizona time, as we talk and do everything related to real estate. Tomorrow is Reflection Friday and Feature
Yep.
Friday. Hopefully, fingers
And
crossed, we
Rant
haven't had a Friday. It's been like 3 weeks or 4 weeks that we've had a
I know.
Friday episode.
Well, it's good because I have 2 new listings. So plus maybe another 2 next week. So I'm looking at the board. Whenever I do that, I'm looking at my coming soons. But
All right, cool. So hopefully join us tomorrow at 9 a.m. Head over to our Facebook page at 22 Mins. Like the page for us. We'd appreciate that support. We're trying to get to that 1,000 likes. We need your help. We need your help.
Yes.
Please help us. All right, everyone. Have a great day. We'll see you tomorrow. Mañana. Take care, everyone.
sounds good.
All right, bye-bye.